is Dr. Mahesh M. Manjari, Assistant Professor from Department of Management Studies, SDM College of Engineering and Technology, Harvard. So dear students, so this is the first day of the week, and I would like to remind you that we are learning how to compute net working capital. So after learning the method that current assets minus current liabilities is equal to net working capital.
Sir,
So we learned yes.
sir, presentation.
I will. So we learned about the method of computing net working capital. Okay. Then we discussed the two cases wherein as a advisor to the company, as a financial consultant, you are asked to estimate the net working capital required in the two cases. Okay, before we go ahead with the third case in the working capital management, okay, so let's have the micro presentation by Shrikant. Shrikant, over to you now.
Yes, sir. Thank you, sir.
You want to share the screen?
Sir, can I start, sir?
Shrikant, do you want to share the screen? You are presenting now.
Yes, sir. Can I start, sir?
Yes, it is not visible to us. Kindly zoom in.
Stock close lower. Yes.
Shrikant, you have to listen what I am talking here. Still not visible.
Sir,
You make it presentation.
sir, screen is not visible, sir. Sir, 1 second. Sir, is it visible, sir?
The page is uploading. Yeah, now you have to increase the size, okay, enlarge it so that the news becomes visible to all of us. No, still we cannot see.
Sir, sir, I am using phone, sir.
You make it full screen. Can you make it full screen? Yes. Now read column by
Is it
column.
okay, sir?
Yes, now it is visible. You read each column.
Okay, sir.
Start.
Okay, sir. Thank you. Good afternoon, Melinda. I am Srikant. I am presenting my micro presentation. Stocks close lower on selling in IT finance. Indices post weekly losses. The equity indices buckled underselling pressure for the second straight session on Friday at risk appetite remaining subdued amid lackluster global cues and lower than expected results from TCS. Banking, finance, and IT counters accounted for most of the losses, while strong demand for the metal stocks fusioned the fall. The Sensex ended 182.75 points or 0.35% lower at 52,386.19. The Nifty dropped 38.10 points or 0.24 to close at 15,689.80. Bajaj Auto was the top laggard on the Sensex chart, shedding 1.99%, followed by the TCS, which dropped 1.52% post its results. The country's largest IT firm had on Thursday reported a 28.5% jump in its June quarter net profit at 9,008 crore, but followed out the domestic business as a drag which restricted with its overall growth. HDFC Bank, Axis Bank, RIL Tech Mahindra, Kotak Bank, and IndusInd Bank were among with the other losers. On the other hand, Tata Steel led the gainer list with a jump of 4.16%, followed by the Bajaj Finance, Bharati Airtel, NTPC, Maruti, and Bajaj Finance. During the week, the Sensex declined 98.48 points or 0.18%, while the Nifty dropped 32.40 points or 2.20%. Domestic equities traded on the weak note on Friday, mainly because of a continued profit booking on financials, said Vinod Modi, head strategy at Reliance Securities. However, metals, pharma, and realty indices shined while the IT index remained soft after TCS missed the earning estimates. He added that buying a momentum remaining visible in mid-cap and small-cap stocks as improved earning prospect attracted investors' interest. Sectorally, BSE Energy, BankX Oil and Gas, IT, and capital goods indices set up to 0.71%, realty, realty, metal, telecom, basic materials, and healthcare climbed as much as 2.38%. Broader BSE, Midex, and small cap gauges outperformed the benchmark, closed up to 0.61% higher. Thank you.
Yeah, any analysis you want to make?
Sorry, sir.
Any analysis do you want to make?
No, sir.
Okay. You stop presenting.
Okay. Sir, I am stopped.
Yes, thank you. Okay, so the
Thank you, sir.
Bombay Stock Exchange ended upon 182 point lower. Okay, the reason was TCS, okay, Tata Consultancy Services posted lower earnings. Earning here is earnings after taxes, or in layman language, profits. Okay, lower profits than they estimated. That is the first reason why the stock market ended 182 point lower. While the stocks, means equity shares of banking, IT and finance, ended lower, their market prices has lowered. Okay, at the same time the equity shares of the companies, okay, of metals like Tata Steel for example, okay, has increased. So this is what we were talking about, a portfolio management. So an investor who has invested rationally into the equity shares of different industries. Okay, so if the investor has invested in, let us say, equity shares of some banks, and he has also invested in metal companies like, let's say, Tata Steel. So whatever loss is going to be incurred, okay, on account of the lower prices in equity shares of a banking company, that will be offset or compensated by the increase in market prices of equity shares of a steel company. Okay, so this is how a market portfolio will be built, okay, to diversify the risk. Okay, so soon I will bring a game wherein you can apply all these concepts and play the game just as if it is real. So with this, now let's go ahead and continue our cases in working capital management. Okay, students, can you see this P.13.3 PDF file?
Yes, sir.
Yes,
Yeah,
sir.
thank you. Let's go ahead with this is the third case in our working capital management and in the total syllabus sixth case study. So, a newly formed company has applied for a loan to a commercial bank for financing its working capital requirements. You are requested by the bank to prepare an estimate of the requirements of the working capital for the company. So again in this role, okay, you will be playing, in this case you will be playing the role of a financial advisor or a consultant, and a company has applied for a loan in a bank to finance its working capital requirement, like our Tata Steel's UK subsidiary, where they have raised, they already got it approved, 200 million pounds for working capital. Same way, a company is applying for a bank loan to finance its working capital requirement. And the bank has approached you to prepare an estimation of the requirements of working capital for the company. And you are asked to add 10%, okay, to your estimated figure, that is net working capital figure, to cover unforeseen contingencies, to meet the emergency, just in case if the company requires more working capital. The information about the projected profit and loss account of this company is as under. So this is the profit and loss account, okay, of the company. So that's why I said at the beginning of unit 4 working capital management, you need to have a very strong conceptual background of accounting for managers in semester 1. So this unit will be very easy for you to understand and learn. So let us look at their projected profit and loss account. Sales 21 lakh rupees. Cost of goods sold 15 lakh 30,000 rupees. Gross profit 5 lakh 70,000 rupees. Administrative costs are 1 lakh 40,000 and selling expenses are 1 lakh 30,000. Put together, the total expenses are 2 lakh 70,000 rupees. Profit before tax 3 lakh rupees. Therefore, profit before tax is 3 lakh rupees. Then 5 lakh 70,000 minus 2 lakh 70,000. Profit before tax is 3 lakh. Provision for tax is 1 lakh rupees. Out of 3 lakh rupee, 1 lakh rupee to be paid as taxes. There is a note here. Cost of goods sold has been derived as follows. So this 15 lakh 30,000 rupees cost of goods sold. How the company is arrived at it, that is explained here. So cost of goods sold, that is 15 lakh 30,000 rupees. How we have arrived here? Materials used. Materials used 8 lakh 40,000 rupees. Wages and manufacturing expense. Materials here means raw materials. Wages and manufacturing expenses 6 lakh 25,000 rupees. Depreciation 2 lakh 35,000 rupees. Total 17 lakhs. Less stock of finished goods. Okay, so 10% not yet sold. Out of the stock of finished goods, 10% is not yet sold. Okay. So this 17 lakh is the stock of finished goods. Okay. Of which 10% is not yet sold. So you need to remove 1 lakh 70,000. 10% of 17 lakhs. So what you get is 15 lakh 30,000. That is the cost of goods sold. Okay. So provided you have understood properly trading account, profit and loss account, balance sheet in semester 1, it is nothing much to understand here. But though I explained all the components, this is just a problem. Solution I have not yet started explaining. Then additional information is given here. The figures given above relate only to the goods that have been finished, means finished products, and not to work in progress. You need to understand these sentences. Goods equal to 15% of the year's production in terms of physical units, are in progress on an average requiring full materials, but only 40% of other expenses. Okay. So out of the budgeted production, 15% of the year's production are in progress, means 85% is finished, 15% is work in process. Requiring full materials, if the cost of material 8,40,000, whatever 15% of 8,14,000. Okay, so is work in progress. In that, requiring full materials, but only 40% of other expenses. So this 15% of 8,40,000 is work in process. Okay, so which requires a full material, means raw materials required will be to the 100%, and only 40% of other expenses, that is wages and manufacturing expenses, will be required for only 40% of expenses. The company believes in keeping 2 months consumption of material in stock. The average holding period of material in stock is 2 months. Desired cash balance is 40,000 rupees or cash in hand. Average time lag in payment of all expenses is 1 month. Supplies of materials extend 1.5 months credit. This is supplier of raw materials, creditors. Sales are 20% cash. Okay. So whatever sales has happened, out of which 20% are cash, it means 80%, okay, are on credit basis. So while calculating creditors, you have to consider only 80%. You have to consider only 80%. Students, can you see the PDF file?
Yes, sir.
Yeah, thank you.
Yes, sir.
Thank you. So sales are 20% cash, means 80% of the sales is on credit basis. So you have to consider only 80% of the sales for estimating the investment to be required in creditors. Then rest are 2 months credit. Okay, so the company is giving a credit period of 2 months to its customers. 70% of the income tax has to be paid in advance. See, 1 lakh rupees the provision for taxes, of which 70,000 has to be paid in advance. Means it becomes a current asset. You have to show it in the current asset part. Please remember, all these adjustments we have learned in theory. Okay, then paid advance in quarterly installments, that is once in a 3 months. You can make such other assumptions as you deem necessary for estimating working capital requirements. But suggest you don't make any further assumption, just go ahead with the data given in the case. Okay, so the approach is same, okay, but this case has some unique, okay, twists, okay, which we need to know how to make the adjustment for them, and then estimate the estimate each current asset and each current liability. Okay, remember we have learnt about the how to do the adjustments for all this, okay, in theoretical aspect. I have explained you in detail, and reading material is also shared. Okay, before we go ahead with estimating the net working capital of this company or the bank, okay, we need to go with the assumptions and working notes first. Okay, the first assumption or working note for depreciation. Depreciation is not a cash expense and therefore excluded from cost of goods sold for the purpose of determining work in progress. So please remember. So depreciation is not a cash expense, therefore excluded from cost of goods sold for the purpose of determining work in progress, finished goods and investment in debtors. In all three cases, you should remember that depreciation should not be taken into account. It should be excluded because it is a non-cash cost or it's not a cash expense. If you forget, then you will end up making the mistake. Since profit is not taken into consideration in our calculation as a source of working capital, income tax has been excluded as it is to be paid out of profits. Out of profits means earnings before taxes is also a profit. or we call it a PBT, profit before taxes. So we need to ignore the taxes also. So with this assumption, okay, so let's go ahead and estimate the current assets first. So you need to have the format. Heading of the table should be net working capital estimate of this company. Part A is about estimating current assets and part B is about estimating current liabilities. Okay. So far anybody has any question, please let me know. If nobody has a query or doubt, somebody should respond politely saying no sir.
Okay, sir, no doubts.
Yeah, thank you so much. So let's go ahead with estimation of the current assets first. The first is raw material in stock. Okay. So this 8,40,000, okay, which is there given in the problem, as you can see here. Okay, the cost of goods sold has been derived as follows. The materials used. Materials means always remember raw materials. 8,40,000. This is 8,40,000 is the product of a budgeted production in units into raw material cost per unit is equal to 8,40,000. That is already given. You just need to multiply it by holding period, which is 2 months. The company believes in keeping 2 months consumption of material in stock. That is 2 divided by 12. Okay, so raw material in stock is equal to 8,40,000 into 2 divided by 12 is equal to 1,40,000 rupees. The company would require 1,40,000 rupees to invest in raw material inventory. The second current asset is work in progress. Okay, so we need to estimate two related to that: raw material, work in process, and wages and manufacturing expenses. So raw material, okay, so is 8,40,000 we have to consider as a whole into 15 divided by 100. 15 is nothing but 15%. Why 15%? Okay, so I have told you need to read the problem, understand. So here it is given. The figures given above relate only to the goods that have been finished, okay, and not to work in progress. Goods equal to 15%. Goods equal to 15% of the year's production, okay, are in progress. Okay, goods equal to 15% of the year's production are in progress on an average. Okay, so remember. So that's why we consider raw material in process 8,40,000 into 15 divided by 100. Holding period is not required because they have directly mentioned 15% of the raw materials are held in work in progress. Okay, so 8,40,000 into 15 divided by 100 will give you 1,26,000 rupees. The amount required to invest in work in progress or work in process. Then wages and manufacturing expenses. Okay. Here you can see wages and manufacturing expenses amount to 6,25,000 rupees. But what information is given? 40% of, okay, yeah. The information given is goods equal to 15% of the year's production are in progress on an average requiring full materials, but only 40% of other expenses. 40% of 6,25,000 is the amount required to invest in wages and manufacturing expenses, okay, or to pay the liability. So we'll go ahead with that. So 40% of 6,25,000. How I write 6,25,000 into 40 divided by 100, or I can rewrite it as 6,25,000 into 0.4 into 15 divided by 100. Why 15 divided by 100? Only 15% of the materials are in work in progress. Okay. So out of 6,25,000, Okay, so 15 divided by 100. So once you simplify this, first you need to simplify 15 divided by 100, that will be 0.15. So it will be 6,25,000 into 0.4 into 0.15 is equal to 37,500 rupees. Okay, so the amount required to invest in payment of wages and manufacturing expenses is 37,500. The third current asset is stock of finished goods. Okay, so stock of finished goods, okay, is equal to 1,70,000 minus 23,500. Okay, so how I arrive at this 23,500? Okay, that is 10% into 2,35,000 depreciation. Okay, so let us see what is that depreciation here. So we are estimating the stock of finished goods. Okay, okay, less stock of finished goods is 1,70,000 rupees, but 10% not yet sold. Okay, then please give me a minute here. Yeah, now please pay attention. Let me continue. So we are now estimating the amount required to invest in stock of finished goods. Okay, so where from 1,70,000. Okay, 1,70,000, 10% not yet sold. Okay, so the 10% depreciation. The 10% depreciation means 10% of 2,35,000 rupees, which is 23,500. We need to deduct to estimate the amount required to invest in stock of finished goods, and that is what is shown here. So stock of, once again pay attention, stock of finished goods 1,70,000 as given in the problem minus 23,500. What is this 23,500? Okay, 10% depreciation. Okay, so 10% not yet sold out of 1 lakh. Okay, 10% not yet sold. So 10% unit. Total depreciation is 2,35,000 for all the units, and for 10% units, okay, or 10% finished goods, it is 2,35,000 into 10 divided by 100. Or you can also do it 2,35,000 into 0.1 is equal to 23,500. Okay. So stock of finished goods is equal to into bracket 1,70,000 minus 23,500, which is 10% of 2,35,000 depreciation. So we deduct depreciation in the estimation of amount required to invest in stock of finished goods. Please remember, we have made this assumption or working note. Please see here, depreciation is not a cash expense and therefore excluded from cost of goods sold for the purpose of determining work in progress, finished goods and investment in debtors. So finished goods, I have just removed that 10% depreciation on the unsold stock. Okay, so if you simplify 1,70,000 minus 23,500 is equal to 1,46,500 is the amount required to invest in stock of finished goods. Same way we have to avoid depreciation or exclude depreciation even in the estimation of debtors as well. Just now I read out the assumption. So the fourth current asset is the debtors. cost of goods sold is 15 lakh 30,000 rupees. It is given in the problem. Okay. The cost of goods sold is 15 lakh 30,000 rupees. It is given in the problem. Okay. So then 15 lakh 30,000 less depreciation. Okay. You remember here, see here where the cursor is moving. If 10% of the total, okay, if 10% of the total goods are unsold, remember if 10% of the total goods are unsold, that is why out of total depreciation amount, that is 2,35,000, we deducted 10%, that is 23,500 from finished goods, because depreciation is a non-cash expense. So in the note we also said it should be excluded while estimating the cost of goods sold also in case of debtors. So cost of goods sold 15 lakh 30,000 less. Okay. If 10% is unsold, means how much is actually sold? Anybody who can reply? If 10% is not yet sold, it means how much is sold in percentages?
90%.
Excellent, excellent. So 90% is sold. So we are going to deduct 90% of the depreciation amount. 2,35,000 into 90 divided by 100, or 2,35,000 into 0.9 divided, sorry, 2,35,000 into 0.9. That amount would be 2,11,500. Okay. So we need to deduct. So the remainder will be 13,18,500 rupees. So pay attention here. Out of 2,35,000 rupee depreciation, we excluded all of it. 10%, that is 23,500, we excluded here while estimating the stock of finished goods as per our assumptions, and remaining 90% of the depreciation, that is 2,11,500 rupees, we excluded while estimating the debtors as per our assumption. Please remember this. Depreciation is a non-cash expense and it has to be excluded while estimating, okay, stock of finished goods, work in progress and debtors. Then we need to add administrative expenses and selling expenses, that are 1,40,000 and 1,30,000, as you can see here. Okay. So administrative expenses are 1,40,000 and selling expenses are 1,30,000. So to that we add administrative expenses 1,40,000 and selling expenses 1,30,000. So total, okay, investment required, investment data is 15,88,500. Okay, so total is 15,88,500. I am sorry. And now the credit sales. Okay, remember it is mentioned in the problem. 20% of the goods sold are on cash basis. Okay, so here it is given in the problem. See this. Okay, sales are 20% cash. Sales are 20% cash. Indirectly, it means 80% of the sales are on a credit basis. So while estimating the debtors, you have to estimate only 80% that are credit sales. So you should pay attention to all this information given in the problem. So credit sales, okay, 80% of 15,88,500. 80% of 15,88,500. 80 divided by 100 into 15,88,500, or 4 divided by 5 into 15,88,500 is equal to 12,70,800 rupees, 80% credit sales. Okay, so this amount is nothing but the total number of units sold into sales cost per unit is equal to 12,70,800. You need to multiply it only by the credit period given to customers, which is 2 months given in the problem. Okay, rest are at 2 months credit, means that this company sells its goods on 2 months credit basis to its customers. So while estimating, it is 2 months. So 12,70,800 into 2 divided by 12 is equal to 2,11,800 rupees, the amount required to invest in debtors. Okay, I hope the statement I am making again and again, your semester 1 accounting for managers, you need to be conceptually very strong. Okay, then the last current asset in the list is cash required 40,000 rupees. So if you add all these current assets, the total current assets, the total amount required to invest in current assets is 7,01,800. So any doubt so far? Please respond. If you don't have any doubt, anyone can respond. Or those who have doubt, they can raise their doubts. Any doubts?
No, sir.
Yeah, thank you. Thank you. So now we estimate the total current assets 7,01,800. Let's go ahead and estimate the current liability. The first current liability is average time lag in payment of wages. Average time lag in payment of expenses. The three expenses given in the problem: wages and manufacturing expenses 6,25,000, administrative expenses 1,40,000, and selling expenses 1,30,000, as it is given in the problem. Total of all these expenses are 8,95,000 rupees. So what is the average time lag in payment of wages? Okay, let's find it out. Yeah, average time lag in payment of all expenses is 1 month. That is 1 divided by 12. 1 divided by 12. Okay. So the average time lag in payment of all expenses is 8,95,000 into 1 divided by 12, or simply you can rewrite it as 8,95,000 divided by 12. So monthly the company needs to hold an amount of 74,583 rupees to meet all the expenses. Then students, can you see this PDF file?
Yes, sir.
Yes, sir.
Thank you.
Yes, sir.
And the second current liability in the list is creditors. Okay. So creditors, when I say, please remember, suppliers of raw materials. So how are you going to find them? By the raw materials purchased. Okay. So as you can see, materials used as good as materials purchased. Materials means, always remember, raw materials, 8,40,000 rupees. Okay, so it is in rupees. So that is the amount which is total number of number of units, that is budgeted production, or number of units purchased into raw material cost per unit is equal to 8,40,000 is given. You just need to multiply that by average holding period. Okay, or the credit period allowed by the suppliers of raw materials. Okay, so it is mentioned here. Yeah, suppliers of materials extend 1.5 months credit. So 8,40,000 into 1.5 divided by 12. Yeah. So creditors is equal to, you forget this, what is there in the bracket. For simple purpose, simple understanding, follow this, what is written in pen. 8,40,000 into 1.5 divided by 12. The suppliers of raw materials give a credit period of 1.5 months to this company. So 8,40,000 into 1.5 divided by 12 is equal to 1,05,000 rupees is the average amount required for this company to meet the liability of creditors. Or the company should maintain 1,05,000 rupees with itself to make the payment for suppliers of raw materials. Okay, for 1.5 months every time. So there are two assets. If we add them, 74,583 plus 1,05,000, total is 1,79,583 is the total current liabilities. The total current liabilities. So the third step is net working capital is equal to current assets minus current liabilities. That is, current assets 7,01,800 minus current liabilities 1,79,583. Okay, so the net working capital is equal to 5,22,217. You have been asked to add 10% for contingencies, that is to meet emergency requirement, just in case if more working capital is required. So 10% of 5,22,217 is 52,222. So if we add both, what we will get is net working capital required for this company would be 5,74,439 rupees. Okay. Okay, so any questions here? Any questions? Students, can you still see this PDF file?
Yes, sir.
Yeah.
Yes, sir.
Any questions? Any doubts? No doubts? Hello?
No, sir.
Yeah, thank you. Thank you. Don't get bored and don't feel too bad just to respond yes or no. This is to ensure, okay, and to encourage students from asking questions. Can you see this tab here? Yes? Hello? Students, can you hear me?
Yes, sir.
Can you see this tab?
Yes, sir.
You can see this tab, right?
Yes, sir.
Okay.
Yes, sir.
Don't get tired. You are not retired people. You are in his 20s. If you have heard our Upendra song, 20 to 30 soldier, start behaving like a retired man at the age of 20. Imagine. Okay. Okay. Okay, all of a sudden, internet is moving at the flash speed. Those who are aware about the superhero Flash from DC Comics. Okay, can you see the story of everybody, somebody, anybody and nobody? Hello?
Yes, sir.
ಪರಿಸ್ಥಿತಿ ಹಿಂಗೈತೆ ನೋಡ್ರಿ. ಓದ್ತೇನೆ ಕೇಳ್ರಿ. A team had 4 members called everybody, somebody, anybody and nobody. There was an important job to be done. I repeat, there was an important job to be done. Everyone was sure that somebody would do it, right? Everybody was sure that somebody would do it. Anybody could have done it, but nobody did it. So beautiful, right? Anybody could have done it, but nobody did it. Somebody got angry about that because it was everybody's job. Everybody thought anybody could do it. Nobody realized that everybody's job. Everybody wouldn't do it. It ended up that everybody blamed somebody when nobody did what anybody could have done. This is the fate of the poor countries, dear students, and poor people. That's it. Okay, so I hope that would have enlightened you and you would have understood something out of it. Okay. Yeah, I need to stop presenting and come back to the Google Meet. Yes. Okay.